Good morning, I'm Maya Keynes. Welcome to your daily market wrap. Today, we're diving into some major developments, Bitcoin's sharp move lower, global policy shifts, and what it all means for your portfolio. Joining me is financial analyst Eli Sterling.
Thanks, Maya. It's been a wild week, especially for crypto investors. Bitcoin just broke a key psychological level, and the technicals are flashing red across the board.
Let's start with the big one. According to CryptoTube, Bitcoin hit a predicted price target of around $82,000 after breaking down from a falling wedge pattern. That's quite a move. What's the setup telling us now?
Absolutely. Looking at the Bitcoin Tether daily chart, we're seeing several confirming bearish signals. The Average Directional Index is above 46 and rising, confirming a strong downtrend. We've got a death cross in place, with price below both the 50 and 200-day SMAs, and the Stochastic Relative Strength Index is in deeply oversold territory, but still falling.
So even though it's oversold, there's no real sign of a bounce yet.
Exactly. Oversold doesn't mean cheap. It can stay that way in a strong downtrend. The moving average convergence-divergence histogram is still expanding negatively, and the Ichimoku Cloud is showing strong resistance ahead. Until we see a clear reversal pattern or momentum shift, bears are in control.
And speaking of other cryptos, let's look at Tether. Our analysis shows a strong downtrend with average directional index above 50 and a confirmed death cross. Where's the bottom here?
SUI is in a textbook downtrend. The price is stuck below the 23.6% Fibonacci level, near the 0% support at $1.31. But even the Relative Strength Index and Stoch RSI are signaling continued weakness. Unless we see volume pick up with a bullish candlestick pattern, I'd expect this one to keep grinding lower.
Turning to equities, let's talk about NVIDIA. Post-earnings, the stock swung from a 5% gain to a 3% loss by close. That kind of intraday volatility screams uncertainty. What's your read?
NVIDIA is showing classic distribution behavior. On our 4-hour trend analysis, we're seeing lower highs and lower lows forming, a clear downtrend. Volume spiked on the initial drop, confirming institutional selling. Until that structure breaks, I'm cautious on any bounce plays here.
And globally, there's growing speculation about Fed policy. The December meeting lacks key labor data, and markets are now pricing in only an 8 basis point shift. How does that affect risk assets?
With less clarity from the Fed, uncertainty reigns. That's why we're seeing flows into Bitcoin as a hedge. But even that's getting punished in the short term. Bond market dislocation and equity jitters are creating a risk-off tone across the board.
One more quick note. South Africa and the US are hashing out G20 participation details. While not market moving, it underscores ongoing geopolitical fluidity. Eli, as we wrap up, what's your key takeaway for tomorrow?
Watch for any momentum divergence in Bitcoin and NVIDIA. If the Relative Strength Index or Stoch RSI starts rising while price holds support, that could signal a short-term bounce. Otherwise, the path of least resistance remains lower.
Thanks, Eli. For all of you watching, keep an eye on those key supports and check our site for real-time updates. I'm Maya Keynes. See you tomorrow.